42% of people who purchased a home within King County last month purchased that home sight unseen. They never even physically went out and saw the property. How's it going, guys? It's your boy Mike from Seattle. We're going to go ahead and do the Seattle real estate market update for the month of August 2020, and it's absolutely crazy out there. It is still maintaining a strong seller's market, and if you are a buyer, beware. You should probably stick around and watch this because you're the person who's most at risk for losing a ton of money if you're looking to buy a house anywhere in Western Washington, honestly, at this point. So let's talk first about the price increases year over year. So Seattle saw a 7.2% increase in the average cost of a home from 2019 to July of 2020. Obviously, I'm doing the July stats because it's midway through August. We don't have August stats yet. 7.2% increase in Seattle's prices year over year. Now, this is where it deviates from the standard course of action. Normally, Seattle leads in the increased prices every single month and every single year. Seattle sets the pace. That's not the case right now. We're actually seeing home prices increase at a faster rate in the surrounding cities and counties. Let's talk a little bit about why that is and why you as a buyer need to be careful, and you as a seller should probably take advantage of this to sell your frickin' property for top dollar. If you're an investor and you were ever considering selling your investment properties and looking to the cheaper Midwest to reinvest, right now is the time to put on your 1031 exchange pants and make it happen. So Pierce County saw an increase in prices 13% year over year, and Snohomish County saw an increase in prices of 15% for the average cost of a home year over year, putting them at a new all-time high of $575,000 for the average price of a house. Seattle saw the highest price ever as well, even though it only had a 7.2% increase. The previous high for Seattle was in 2018 with $726,000. Now we're at $727.5. So let's talk a little bit about why we're seeing these increase in prices and why Seattle's actually lagging behind a little bit. Because most people are saying to themselves, you know what, we've had it with these vertical cities. In the shadow of everything that's going on globally with the big issue that I can't say its name because the YouTube algorithm will kick my butt for it, but you know the thing that's been happening that we have to wear masks for, that, right? People don't want to social distance and be cooped up in an apartment building, in a vertical city with all of the other people living above them, below them, beside them. They want to get a little bit of space. So they're fleeing to the suburbs in record numbers, and we're seeing this in most major cities around the country: New York, San Francisco, LA, Portland, all these other big vertical cities. People are fleeing to the suburbs where they can get cheaper, more affordable housing and more space. If you're going to be stuck on a quarantine, at least you want a front yard, backyard, and a porch, right? That's why we're seeing these increased prices in other counties that are outpacing Seattle, when usually that's not the norm. But why are we still seeing an increase in prices in Seattle, Mike? How come Seattle still up 7.2% year over year? Well, great question, and I'm really glad you asked, a random YouTuber. Appreciate that. The reason is money, i.e. interest rates, borrowing money from a lender, is dirt cheap. The Fed has been slashing interest rates like crazy. And while there's not a direct correlation between the Fed slashing interest rates and the actual interest rates on mortgages, the moral of the story is if you want to get 30-year fixed rate money, right now is the cheapest that you can possibly buy that money at. And people are taking advantage of the fact that they are literally getting free money and they are trying to buy like crazy. So demand is going up, while supply is getting whittled down to next to nothing. So we're down about 50% from the normal in terms of the supply of houses on the market. You know, usually we're around 1,600 houses at any one given time. Right now, we're around 900. So that drop in supply that's continuing to last is really playing havoc with what buyers can do. That's why we're seeing a stat that I've never heard of before. 42% of people who purchased a home within King County last month purchased that home sight unseen. They never even physically went out and saw the property. And the reason for that is because there's so many buyers, you don't have time to schedule a showing. People are coming in with all cash offers, underwriter approved pre-approvals, and they are buying stuff up sight unseen like you wouldn't believe. So if you want to buy something, you've got to get in on this crazy mess of a bidding war, buying something you haven't inspected, and that's why I'm worried for you, the buyer. If you are buying, you need to be extremely careful, all right? These next 2 minutes are for you. A few things you want to keep in mind. If you overpay for a property now because you want to get it, and you're going to say to yourself, well, you know, things will just appreciate and go up and the rest of the market will catch up with it eventually, usually you'd be right. But let's talk about what the Fed has done. They've dropped interest rates so low that they have nowhere left to go but up. Yes, I suppose we could go to zero. Highly unlikely. But at some point, the rates will have to go up. And when the rates on mortgages increase, for every 0.5% that the mortgage rate goes up, it equates to $50,000 less in purchasing power. So if my interest rate is gone from 3% to 3.5%, my purchasing power goes from $500,000 to $450,000. Now, what happens when those interest rates go up 2, 3, 4, 5% to counteract the inflation, potentially, that we might experience because the Fed has been printing money like it's going out of style? When the Fed has to raise interest rates, potentially as a countermeasure to deal with the inflation, it's going to reduce the purchasing power that people have. Right now, this is a bunch of economic stuff that's on a national level that I really don't want to get into. What I really want you to be aware of if you're looking to buy a house in the Seattle area is don't overpay for your property. If you're going to get into a bidding war, don't get emotional. Have your firm line in the sand that you will not go over. Don't pay $80,000, $100,000 or more over the list price. It's not worth it long term. You may end up upside down in a house. And I don't think we're going to see a recession like we saw in 07, 08, but we might see a localized recession, a localized plummet of the housing market as some normalcy returns when listings come back and we get back to the groove of things. I don't want to see you get hurt long term or be trapped in a house when you might want to move at some point. Things in life happen, so be careful so you don't get caught with your pants down. Lastly, I'll leave you with this. If you're a seller, it's a great time for you. If you're a buyer, you need to be very careful. I don't know when things will get back to normal. Really, it probably all depends on how we decide to handle this issue. At some point, we're either going to develop and invent our way out of it via a vaccine or a treatment, or we'll get to the point where we say, enough's enough, we're going back to business as usual, and we just don't care what happens because we can't do this for any more time. I don't know what the correct answer is. I don't know what's going to happen. But at some point, some semblance of normalcy will return, and I don't want you to be stuck having to pay the piper in a really inconvenient way. Guys, if this video was beneficial to you, or if you liked it, or if you'd like to see me do more market breakdowns in the Seattle area, I'd be happy to do it. Leave a comment down below, like, subscribe, help me sell out and become another big YouTube star who does nothing but make annoying videos 3 times a day. That's honestly my dream, and I remember as a kid in kindergarten in the 90s being like, you know, when I grow up, I want to be famous on YouTube for being a sellout, and you can help me get there. One video at a time.